you got to remember in March 2020, during the COVID sell-off, the Fed moved in to help the markets by providing liquidity. What did they do? They bought fixed income ETFs to give the bond market liquidity, and BlackRock basically did that program for them. So, you have some people call BlackRock the fourth branch of government. So like, this is a big deal. This company is I can't overstate it really how crucial they are. Largest asset manager in the planet.
Over the past few months, Bloomberg analysts Eric Balchunas and James Seyfarth have provided us with a ton of information and updates about the spot Bitcoin exchange-traded fund applications currently pending approval from the U.S. Securities and Exchange Commission. With such overwhelming silence from the SEC and the concerned firms being mandated to keep mute, Eric and James have provided credible information about meetings between the firms and the commission, updates to the applications and what they mean, and how soon we can expect the SEC's green light. At the moment, Eric and James believe there is still a 90% likelihood that the SEC approves at least one spot Bitcoin ETF by January 10th, 2024. Eric recently appeared for an interview with Blockworks Macro, during which he described some of the bigger and deeper details and nuances of the applications and how huge an approval will be for the entire cryptocurrency industry. During the interview, Eric talks about how huge a deal the applications are, especially BlackRock's, which is not just the world's largest asset management firm, but so influential that it has been described as the fourth arm of the United States government. According to Eric, it was almost unimaginable to think that such a huge traditional finance player would be interested in Bitcoin and the cryptocurrency industry. However, FTX's collapse opened BlackRock's eyes to this massive and entirely different world of opportunities. After years of criticism, they realized the huge opportunities in the cryptocurrency industry, and according to Eric, absolutely nothing can stop them from getting their share of the pie. In fact, the leading Bloomberg analyst is certain that these firms are pulling all the stops to get the approval and getting everything required to make this a huge success, including tens of millions of dollars in advertising revenue. We will now bring you clips from the interview as the Bloomberg analyst reveals some interesting facts about the Bitcoin ETFs, the applicants and their chances of getting an approval, and what it all means for the cryptocurrency industry. Please watch, share, and like this video. Also, subscribe, turn on post notifications, and drop your comments to help this video reach more viewers. Thanks, and enjoy the video.
I didn't think BlackRock was even looking at this. And because over the last 10 years, we've seen filings come in, but they're always from these, like, we'll call them the mid-tier issuers. Like, there's the top 5, and then there's like VanEck, GlobalX, ARK. Like, these are all legitimate issuers, but they're not in the top 5, and especially not the top 3, especially not the number 1. So BlackRock filing is just like mind-blowing, and they have so much going on. You just think like, and then Larry Fink, we all remember him like kind of trashing crypto like 5 years ago. So it made no sense to me. And so when I saw it, I was like, oh my God. So James and I quickly huddled, and our odds of approval went from 1% to 50 instantly.
Wow.
Because it was like, what does BlackRock know? This makes no sense. If any other issuer file besides BlackRock, Vanguard, or maybe State Street, we're just not moving our odds. So anyway, they went to 50%, and then we started to dig through why. And then Larry Fink goes on Fox News or Fox Business, maybe within like a week of that. And he starts calling Bitcoin like, digital gold, and it's the new thing. And I'm like, oh my God. So we stuck at 50, and we thought, okay. And then we thought, he clearly is into this. And we then looked at their annual report, and we realized he had a couple things in there that he was looking to do that I thought were revenue generators. So I think BlackRock largely sees a revenue opportunity, but I also think they see a revenue opportunity, but a disintermediating opportunity. Like, BlackRock has a little Vanguard in them. They do like to go in and disrupt. And I think they see that the crypto exchanges, A, are expensive, and B, after FTX, can you trust them? And that was something they saw probably. They're like, hey, we can make it safer and cheaper. So anyway, they launched, and then other people followed suit because they did. And then we started looking at the Grayscale case, and we were like, wait, if Grayscale wins, this could really, maybe BlackRock, this is like a call option. In case Grayscale wins, BlackRock will be right there. So then we had all these theories on like BlackRock being there, so the SEC could like hand them the keys and not Grayscale. And anyway, long story short, Grayscale won their case, and our odds went to 90. by the first final deadline, which was January 10th, which is coming up, and we're still there. And so, but to your point, BlackRock was a shocker, and in the grayscale winning, we only had a 40% chance. So even that was a bit of a shocker, although 40% was pretty reasonable, and they won. And so I think those two things really got us on this trajectory up to 90%. And then the final thing that was huge was seeing and hearing back channel that the SEC was engaging, saying, here's our comments on your prospectus. Because up until then, and your 10 years, the Winklevoss twins started it, every time we had these cycles, it would be like 10 filings and then radio silence, delay, and then radio silence, denial. This time we heard there's no radio silence. They were talking to the issuers, giving them comments. Then you saw the prospectus coming in, updated. That was major. And that justified our 90%, we thought, because you just aren't, that's normal. And so normal was a break from the pattern. The radio silence denial thing is abnormal. So it was a pattern of abnormalcy for 10 years. And now we have normalcy. That's a good sign. So that's sort of where we are now. And there's obviously some other little nuances we can get into, but we feel like now we're feeling pretty good that we stuck our neck out there. We were a little early and we were a little optimistic versus our peers and versus some other people. But we held the line, and it looks like it's pretty good chance they will be approved by January 10th.
During the interview, Eric discusses his views on each applicant and their odds of getting approval from the SEC. BlackRock is, of course, the largest horse in the race. Eric believes the asset management firm has the best odds of getting the SEC's approval by January 10th because of their influence in Washington and with money managers worldwide. According to the Bloomberg Analyst, the next strong contender is ARK Invest, which is partnered with 21 Shares, a firm with a lot of influence in the cryptocurrency space in Europe. Eric explains that while the SEC might favor traditional players like BlackRock and Fidelity, asset managers looking to get into the crypto space might be more trusting of firms who have been in the space for longer and have consistently shown their love for cryptocurrencies. In this regard, applicants like ARK Invest and VanEck have a bit of an edge. Eric notes that ARK Invest could easily raise a substantial amount of money by selling its GBTC shares to get a head start for the iShares ETF. Even this only gives them a head start of a week or two. Eric reckons that might be the only thing needed to make them pretty popular among the new institutional investors looking to get in. Then, you have Invesco and other applicants, each with their own strength and a fair chance of approval, Eric adds. But what can we expect after the SEC approves one or more of these applications? Will this be a buy the rumor, sell the news event like with the futures ETF in 2021? Here's what Eric thinks.
The volume will be underwhelming after BITO. Because remember, BITO launched in a mania. October 2021 was a mania. It was like Beatlemania, but Bitcoin mania. So that's gone. The thrill, all the mania is gone. And those little retail investors, they're either using Coinbase or they're just once bitten, twice shy. I don't need crypto anymore. So all those minnows that bid on BITO the first day, I don't think they're in the lake anymore. What's in the lake though underneath is these bigger fish, these advisors. And they don't rush to the bait, okay? They're going to swim around it and look. So the good news is the bigger fish are there. They're hard to catch and they don't bite early. So you're probably going to see a lot less volume and assets early. Again, though, we will see enough to see which ETF gets the mojo, but it's over time, over a year, 2 years, 3 years, that I think we see somewhere 20 to 40 billion in this category. If you extrapolate the spot Bitcoin ETFs in Canada and you extrapolate them to the size of the US market, you get 70 billion in the US. If you extrapolate Europe, you get to 30 billion. So we're kind of in the middle. 45, 50 billion is where we think the US market will be after a couple of years. And then maybe it inches up to 70 billion. That's right where gold is about. And that puts you at 1% of ETF assets. So that's our general estimate. But because advisors are the bigger fish who are going to swim around a little bit and wait to see which one's successful, which one's cheapest. But once they bite, they're big. So that's the good news. So I think we're going to see incremental big bites from model portfolios and advisors, but they're not going to rush in the first day like we saw with BITO.
My question to you as well is, okay, there's the 1% maybe for the Bitcoin spot ETF. Like, how likely is it, or how much relative attention are these other potential crypto ETFs going to attract, do you think?
I think minimal. And the Ether futures ETFs launched. They really kind of nobody cared. And I think the question we know they don't. People don't like futures, especially advisors. Like they don't want derivatives. They'd rather have spot.
Right.
But even the Bitcoin futures ETF has action. I mean, it still trades like, let me see what the trading volume on it's very good. It will dwindle once the spot launches, but right now it's the only game in town. It trades $300 million a day. It's very good. So nobody really using the Ether futures ETF. That's probably a bad sign for like the what comes next crowd. Would a spot Ether do better? Probably. It would do better than the futures, that's for sure. But how good would it do? I think for most advisors, and again, normal people who are not into this that much, I think Bitcoin's plenty.
Yeah.
I think they're largely going to go around Bitcoin. And you do have some pretty big advocates in your world saying, like Saylor, there is no second best. But like Matt Hogan, who's someone I trust, he's from the ETF world, but is pretty much embedded in crypto now. He thinks Ether is a bigger deal than Bitcoin. I don't know. But even with him saying that, I know, like, if for my regular person, if I'm just sitting there and thinking my own personal account, I'm probably thinking, you know what, honey, just buy a little of this Bitcoin. It'll move with Ether. They're all the same. It's good enough. It's the one. We don't need to go crazy here. That's sort of, I think, how most people are going to play this.
When asked about GBTC, Eric explained that they would eventually be allowed to convert their trust into a spot Bitcoin ETF. However, he believes the green light for that will come much later, probably after every other application has been approved or denied. Eric believes the SEC will delay its decision on GBTC to give others a fair chance of getting their ETF running before GBTC, which already has a market capitalization of about $24.8 billion. Even BlackRock will have a bit of a challenge matching that immediately if they are both approved at the same time. In addition, the SEC has taken some legal beatings from the battle with Grayscale, so it has the motive for a little revenge. What are your thoughts on Eric's outlook on the entire spot Bitcoin ETF affair? Please share your comments and observations in the comments section below. Also, ensure you like this video, subscribe to the channel, and turn on post notifications for more videos like this. Thanks for watching.
Hey Savvy Finance enthusiasts, massive shout out for being the heartbeat of Savvy Finance. Your support has been the wind beneath our wings, and we can't express our gratitude enough. Now buckle up because we've got an exclusive deal just for you. Ever wanted a slice of the action? We're offering a golden opportunity to own part of our YouTube channel's potential future revenue. This isn't just an investment, it's an invitation to be a part of our story. Investing means you're not just an investor, you will be a participant in the future of Savvy Finance. No cheesy lines, just a genuine call to embark on this journey together. But wait, there's more. Your mission, should you choose to accept it, become a Savvy ambassador. Share our videos on every platform: Facebook, Twitter, LinkedIn. Your shares amplify our visibility, potentially translating to more views and more YouTube revenue. Here's the kicker. If our viewership increases, we would not be just growing financially. We would be making a tangible impact by spreading valuable financial education. Now the icing on the cake. Invest and you'll score exclusive access to our private Savvy Finance Discord. Here you can chat with Savvy Finance, swap ideas with fellow investors, and be at the forefront of exciting developments. Click on the link below to register your Gigastar account. You can also find the link to my offering page in the description below. Get your Gigastar account ready, review the offering details, and let's embark on this thrilling venture together. To the incredible Savvy community, thank you for being the backbone of our success. Your journey is my journey, and together, we're creating waves. Cheers.